Hi, good morning. Welcome back to another episode of a podcast with James Abagi. First of all, I want to thank all of our subscribers, those that have taken time to like, share, make comments, and follow us on all our social media platforms. And everyone that has sent messages, inquiries, questions, I'm sure we've answered all of your questions. Welcome back to another session of James Abagi Life in Podcast in the real estate market. So this morning, we will be looking at money banking versus property banking. Very interesting topics, right? Okay, quick one. People will say, James, why should I not just save my money in the bank than buy properties? I'll just give us several reasons why the property banking is more better than the money banking. First, we'll be looking at the nature of the asset, be it the money banking or the property banking. Now, money banking deals with cash deposits, loans, and all of that, while property banking deals with assets, real estate acquisition, construction, homes, either commercial, residential, any aspect of the real estate. These are the two differences. Now, look at this. From this nature of assets, if you put your money in the bank, the percentage of the returns you get is minimal with the current inflation in the sector or in Nigeria. But look at property banking. You get a property today for X amount, and a few months from now, the same duration time you leave your money in the bank, and a few months from now, the property has increased, it has appreciated. So meaning that, assuming you got for a 10 naira, in the space of 3 to 5, even to in 1 year, that property is no longer worth 10 naira, it might be 110 naira, which means it has appreciated. So the nature of the asset, either money banking or property banking, matters. Another reason for money banking versus property banking is asset and capital ownership control. Interesting. Now, money banking offers you a quick asset. You want to get money, bring something and you get it. But property banking doesn't give you that. Because by the time you buy and you want to sell, it might take a while. However, that while it takes gives you return on investment. So either ways you find it, money banking or property banking, the property banking still gives you an edge. Also on inflation level, the property banking gives you an edge. While the money banking, inflation can affect that same funds you have in the bank. Put a million naira in the bank, take for instance. Go back in 30 days, it's no longer the million naira because what you would have bought then with the million naira will now be less your fund. While in the property banking, what you have acquired then, instead of it reducing, it's appreciating. So for this, property banking still stands tall. Okay, now another reason between money banking and property banking is wealth preservation and appreciation. Money banking helps you store your money. It will just store it in the bank while someone else will use the money and trade, get the profit and give you little or nothing on that same money you've stored. While property banking in real estate over time gives you huge return on investment. If you notice in all of those points, property banking gives you huge return on investment. Either ways, you take it to the bank and you will always make profit in it.